Question 5, total PSC. The question says, distinguish between two perspectives.
Please, what page is it?
Distinguish between two perspectives of identified tax balances in a financial statements. There is two methods
Hello, Mr. Kazem.
we use to solve different tasks. There is two methods we can use.
Hello,
Okay,
sir.
Mr.
The
Kazem,
question.
Yes.
what page is this question, please?
What are you saying?
What material are you reading from?
What material are we doing before IAS 12? And I've sent question and solution to the platform. We even said on the platform, continuation of IAS 12, what we did on Tuesday. It's not assignment question. Assignment has been extended to be submitted till next week, Tuesday. Which material do we want to use this night? IAS 12, we contact. From there, go to question 5, dollar PSC. The first A part of the question says, distinguish between these two perspectives of identifying different tax balance in the financial statement. The two perspectives, the two approaches, or the two methods. One, we have reliability method. Two, we have deferral method. These are the two methods. Reliability method is most popular, and it makes use of items in statement of financial position, like your PPE, like your trade receivable. Deferral method make use of item in the P or L. Just as depreciation. Enterprise. Is that enterprise? He has started this night again.
She came. She
That enterprise.
Give me.
To calculate deeper task.
Carry the phone.
Two methods to calculate deeper task. Two approaches. Go to question 5.
I said, Light, calm down. Ask politely. And I told her what to say. She was not. I was not tell her.
Please, can someone tell that person that
again.
Kind wahala be that?
Enterprise has started again. I don't understand. In that class, in that room, there are about 7 or 8 people talking. Maybe one person paid. Everybody was not listening. I don't even understand. Now, the B part of the question says, compute the different tasks, the requirements. Compute the different task provision, which is required as at 31st December 2017, and the charge to profit or loss for the period in accordance with IAS 12 income tax. 6. That's all. What is now my own duty in exam? I need to get the deferred tax balance at the end. How do I do that? I will make use of my deferred tax table. We'll say deferred tax table. I will say items. Carrying amount. Tax base. Temporary difference. Tax rates. Deferred tax liability. Deferred tax assets. First item, PPE. What is the carrying amount of the PPE? 250. The tax base, 218,750. Has it created a temporary difference? Yes. What is the temporary difference now? Give me figure. Has it created a temporary difference? Yes. What is the temporary difference? Give me figure.
3150.
I know that. That person that talks, the voice looks familiar. That's 1,250. What is the tax rate? I will go to the question. You go to the question. Additional information 5. The tax rate is 30% for 2017. The government has not announced the tax rate for 2018, but it is expected to rise to 36%. It's just an expectation. We are expecting fuel price to rise to 1,000. But as of today, the reality is that selling fuel price around 600. So the tax rate that you see obtainable is 30%. I will now interpret. Is it a deferred tax liability or deferred tax asset?
Deferred tax liability.
Somebody say asset here. How do I know deferred tax liability or deferred tax asset? You said when the carrying amount of an item is greater, is higher, is more than the tax base, it will lead to deferred tax liability, not assets. However, if the carry amount is lesser, that means the tax base is not higher than the carry amount, it will lead to deferred tax assets. Yeah, carry amount is 250 and tax base is 218,750. That means carry amount is higher. So, any issue? We are doing question 5. PS.
And Mr. Kazim, please, I want to quickly ask a question.
Ask
So,
my sister.
when
You must finish your money.
all right. So when do we know going to use this tax table that has to do with deferred tax liability and deferred tax assets, or charge and credit?
Good question. When to identify deferred tax liability or deferred tax assets? When do we know this is what to do? What does the requirement ask of you?
The requirement said compute the deferred tax
Uh-huh.
provision. I'm trying to open the
You will start from
question.
the
The
requirements.
requirement says that we should compute the deferred tax provision.
The deferred tax provision.
Can you hear me,
That is the
please?
requirement. Don't forget, I
Yes.
said IAS 12 only deals with two things. It's either you have to calculate current tax or you have to calculate deferred tax. You ask me to calculate deferred tax. You list item. I will know all those items. They create a temporary difference. Those items, do they create temporary difference? When do I know that they create a difference? When deferred tax, like when the carry amount and tax base are not the same. Don't forget, I told you when we did this thing on Tuesday, I said it's only two ways you can determine what goes to the POL, deferred tax that goes to the POL. It is either charge or credit. How do we know it is a charge or credit? Two ways. You compare the opening balance and the closing balance. Then depreciation and capital allowance. And now put comma to that one. Say, provided that depreciation and capital allowance are the only source of temporary difference. That means there is no other source of temporary difference except depreciation. In this case, I cannot be talking of depreciation and capital allowance because we have so many sources of temporary difference. Are you getting what I'm saying? So it depends on what the question asks me. If you say calculate current tax, yes. How do I calculate current tax? I must be given accounting profits. And just you cannot say as you calculate the deferred tax now. I now say okay. But in case the question wants to lump everything, you are still going to see this night. They will lump everything together and they will ask you all the requirements. That is the end point you are still going. You must. Is your answered? Is your question answered?
I think so. Because I'm trying to like link what you did now to the assignment you gave us. And I know
What
that
happened to
at
the
some point I
assignments?
got confused.
You are confused.
Okay,
How?
so I got confused at some point.
For the
Yes.
assignment.
All
The
right.
assignment
So
are
I didn't
simple.
know. Yes.
Okay, don't worry,
Mr.
don't worry, don't
Kazim, they're
worry, don't
very
worry.
simple. I
Follow
know.
me. I will also project the assignment now. We will not solve. I will not be asking you people, kí ló sọ, kí ló fẹ́ ká ṣe? What do they want us to do?
Okay, I think that will be better.
You are very, what do you say?
No, I said I think that would be
I did not
better.
hear you well. Talk.
I think that would be better. Hello,
If you
sir.
don't talk your mind, we don't know what to do.
Hello, sir.
Hello, sir. Are you there?
What are you saying?
We
Yes?
lost a bit.
You
We
are
can't
not
see your
Didn't hear.
speaker.
okay, you not see my screen.
And we cannot hear you also.
Yes, and we didn't hear you.
Can you see my screen now?
Yes, sir.
Yes, yes.
Okay. Now that you can see my screen, me, I cannot see you, but I can hear you. Trade receivable. They've given me 62,500. Oh yeah, what is the tax base? What is your class? What is the tax base?
We don't have tax base for trade
You know
receivables.
what?
We don't have tax base.
The tax base is 62,500.
The tax base is 62,500.
Yes,
Somebody is
sir.
how do you get your 62,500?
Because from the balance and the provision, we have to less it. That's going to give us our tax base.
They play. Just they play.
The tax base is 0.
Yes, thank you. They play. Which is 0. Oh yeah, look here. Measurement principles in determining the tax base. This is what you will use. Measurement principles in determining the tax base. Measurement principles. This is another way. I told you it's only 6 ways they can test you the factors for your exam at this level. Number 1 way, they will say they bought an asset. They will give you rate of depreciation and the capital allowance. Is there anybody in this class that does not understand that one? That is the first way. The second way, they will give you depreciation and capital allowance. You interpret. The third one, they will test your knowledge of tax expense, the accounting entry, which you say current tax, over or under provision. Then movement in different tax that will give me tax expense that will be reported in P or L. Then I will calculate my different tax that will go to statement of financial position and the current tax they've given me to go to current liability. This is the third way. The fourth one, how to identify temporary the tax base and the temporary difference. How to identify the tax base using measurement principles. The fifth one is the calculation of current tax. The sixth one is not the combination of everything where we are going to end with. You must spot, if they give you question, you must know what to do. Are you talking about asset and depreciation? I know what to do. Do you give me depreciation? I know what to do. That is what I put in that assignment. I did not increase the volume of the assignment. I just take small question that you can easily get the principle so that you absorb the principles. After today's class now, I will increase the complexity of the assignments. I will send tomorrow morning so that you will see everything. And you go to your icon pack, you go to your past questions, you go and read. You will see everything. If what I'm saying is like, go to your past questions. See, if they do for you, you go test them. If they give you juju, you must go test them. Look at the measurement principle, Jare. A, if an item in a financial statement is taxed on cash basis, the tax base will be 0. Go to the question. Is there any item that is taxed on cash basis? Giving you the question, yes. They said additional information true. Interest is taxed on cash basis. If I get to interest, the tax base will be 0. Principles 1. Principles 2. If an item in the financial statement has already been used, we have used it in arriving at a taxable profit. The carry amount equals to the tax base. The top principles on the measurement. If an item in the financial statement does not have tax consequence or is not deductible for tax purpose, the carry amount equals to the tax base. Let's see whether we have that. Yes, we have it. Additional information 5. Points are not tax deductible. Points are not tax deductible. The carry amount will equal to the tax base. The last one. Application of accounting principles with the knowledge of the tax law to determine the tax base. We will now be using the eyes of an accountant to determine carry amount. Can we have this slide? This slide that you have already? Or can we have this slide? The slide that has been sent to the platform since how many days? And they've resent. The application of accounting principles with the knowledge of the tax law to determine the tax base, that is the last one. If you can know these 4 principles, nobody, you will be able to do this kind of question when you are to identify the tax base and the temporary difference. Before we go back to the question, any question?
Mr. Kazim, please, you were trying to explain this D part.
Which one?
At the application of accounting principles, knowledge of tax law, you like that you now be seeing from the eyes of an accountant and the rest.
Yes, I've explained. If you are using carry amount, the eyes of accountants. If you are using tax base, you now look at the side of the tax person. That is it.
Please, can you explain that B part?
I have explained. You will see the what I'm saying go now in the question now, so that explanation, if I continue to say that thing, you will not get it. But now you will get it now.
Okay.
So let's go back to the question. You will see. Look at it now. Additional information 1 says the trade receivable balance in amounts in the account is made of the following amounts. The balance at the beginning, they give us 6875. They now removed out 2 debt provision, 62,500. To me as an accountant, what is the carry amount? 62,500. I want to do tax base now. I will now look at the eyes of the tax base. Oh, does tax people understand provision for bad debts?
No.
I will not be using the face of a tax person now. Does anything related to provision for bad debts concern tax person? That's I say application of accounting principles, you use it for the carry amount. Then for the tax person, is the tax base. I don't know when we are going to close this class today because we must finish this topic. If not 12 o'clock, we die here. You must get it.
What you said again, no?
Huh? Can I hear you?
Yeah, the last explanation you just gave now, please explain it again.
I know it will. If I be continue to be saying it that place, you will not get. You will still say you explain.
No, this one that you just explained based on this question that
Yeah.
I talked about this trade receivable. Yeah.
It's clear. Should I explain again?
Yes, sir. We explain.
What is the carrying amount? 62,500. How do we get 62,500? Initially, it was 68,750. They removed provision for bad debt. That is a principles of accounting. What do we do to provision for bad debt in tax? We add it back. So in the record of the tax people, you cannot say 62,500. What are you going to see there?
68,750.
68. That's all. Please, this night, after today's class, please find time during the weekend to go through everything. Please, it's not hard. Just take your time, rewatch the video, study, you get it done. Has it created a temporary difference?
Yes, sir.
Yes. What is the temporary difference now? 6 to 5, 6 to 50, 30%. We have not done this. 30%, 1,250.
1,875.
The first one is 9,375.
9,375 is a liability because the carry amount is greater than the tax base. The second one now, oh, the carry amount is lesser than the tax base. It's a deeper tax asset. Asset of how much now? 30% times 6 to
1,875.
1,875.
Yes.
The next one, interest receivable.
Mr. Kazim, sorry.
How much is the interest receivable? 1,250. That is the carry amount given. What do they say about interest? Go to additional information too. Interest is tax on cash base. What would be the tax base?
Is 0.
0.
0. Observation, sir. So, what is the observation? This is skill level. That is what you are. So this is task. The observation.
Hello, sir.
We will
Yes,
not
sir.
finish it.
I understand, but I think for someone to be asking about the this provision for bad debt, so our people need to go and read about the provision, the tax provision that talks about the allowable and disallowable. Do you understand better? If they can go for that previous knowledge to go and study, they need to study that particular aspect of taxation. So it's part of our previous knowledge. People are supposed to have understood that one before coming to this class. That's my observation, sir.
%90 of those in this class, they did accounting now. Except those who are coming from foundation.
I lost
If
my.
you are coming from foundation, you will do task in ski. Go and register for your task. Because if you have to go by that, you will not finish this topic at all. You go to exam. But it's only little knowledge you need in that to be able to understand this class. Maybe we will just rush this class and go to next topic. Because it's as if this task, people are finding it difficult to understand. And I don't know what I would do. Maybe I should throw it back to Mr. Wasi to take.
You can continue, sir. We are going to get it. Just continue. We are following you.
No, just continue. We'll get it. Don't worry, yeah? Don't worry, yeah?
I'm worried. Because of what you see, we are wasting our time.
No, sir. Let's continue, sir. Getting it.
Because we are here to know. We are here to know. I want you to see the way I'm saying it. And I've tried to break it down, so that you can get the basics very well. If you go to ICANN part, you cannot see this way. You cannot even see this table, and they'll just be giving figure. Go to textbook, you cannot see this table. You cannot see just my hand making. All those diagrams I'm giving you, measurement principles to make the job easier. You know, has it given us a temporary difference? Yes. 1,250. What is the tax rate? 30%. Say deferred tax asset or deferred tax liability?
Deferred tax liability.
You should that you are following. 30% of 1,250.
375.
375.
Okay.
That is that.
I'm sorry.
I'll go to the next one.
Sorry, Mr. Kazim. This interest receivable that they said will be taxed when it is received in cash. We said is that the tax base will be 0 because the taxman is not considering it now until when it is received in the future in cash. That's why it's 0. What if it has been received?
So if it has been received, so we will not call it interest receivable again.
Okay.
Interest receivable will credit our POL. Then we debit receivable. When we receive as an accountant, what do we do?
Okay. Well, I think that's.
I will debit my bank and credit trade receivable.
Okay. Yeah, I think that's very clear.
How is it going to be part of this thing?
Okay, thank you. Now, for the trade receivable, for that provisions for doubtful debt, what if they tell us it's a specific provision and the taxman will allow it?
Good. That's a good question. We have general, we have specific. Abi?
Yes, sir.
Those one, they are related to your law. That's a valid point too. Let me explain that part very well for you. IAS 12 make guidance on how to treat current and deferred tax. For all the world, It does not understand your tax law. It just take all those things that are common. Provision for bad debts. Either specific or general, it is Nigeria issue. It is not UK. They in UK, they just sit down that they don't know the tax law we do here. Tax law are different in all country. But IAS 12 just make a general rules. So if you are not doing IAS 12 as in FR, either specific or general does not concern IAS 12. So that is a provision for that student. But if you're in your tax class, which is governed by tax law, in tax law, they now say, okay, provision, certain provision are liable, certain provision are not liable. That is your, even donation to Red Cross, donation to APC. But in IAS 12, there's no, it's a general rules. It's giving everybody in the world. Those in Zambia, in Ghana, in everything. He does not know the tax law that is valid there. You just see that what is common to those everything. I hope the question is clear.
Yes, sir. Thank you very, very much. I mean, you can see
now,
that.
I want to make that please let this class flow. There might be the question after I've saw the question finish. Now ask all the question. Ask. Just an appeal so that we can do better. So after the class, we can be listing it. So that the class will now start asking those questions. The question for me, review. Fines. Under payable, now we have fines. Fines is 12,500. What do they say about fines? Fines are not tax deductible. Don't forget the measurement principles. If an item in the financial system does not have tax consequence or is not deductible for tax purpose, the carrying amount will be equal to the tax base. Straight. What will now be the tax base now in this question for fines?
12,500.
Why? Because it is not tax deductible. If it is not
Yes,
tax
sir.
deductible, carry amount will equal to the tax base. Interest payable. How much is the figure for the interest payable? 2,500. He said interest is taxed on cash basis. Answer interest payable or interest receivable? 0. Interest is taxed on cash basis. This does not create a temporary difference. What will now be the temporary difference now?
2.5.
2.5.
2.5.
Is it a deferred tax liability or deferred tax assets?
Deferred tax liability.
Deferred tax assets.
Which are we going to
Liability.
do?
Assets.
If it is not liability, if it is assets. If it's not assets, it's a liability. Which are we going to believe? Look at it. Interest payable is an asset. This is a payable.
Liability.
Which one is greater than here now? You are paying money out. Which one is greater? You will agree with me that 0 is greater than minus 2.5.
Yes, sir.
So it's going to give me what? Deferred tax
Deferred tax assets.
Asset of how much now?
750, sir.
750. That is all. That is all. I will sum them together. 9375 plus 375.
9750.
I will put that on 9750. 9750. 875 minus 750. 1875 minus 7 plus 750.
2625.
2625.
625. I will now come here. I will say default as balance as at 31st December 2017. Open default as liability 9750. Default as assets 2625. 9750 minus 265.
7125.
7125. This is what's going to be applied in statement of financial position. Not current liability. It's a credit balance. That is why you're always saying liability more than asset. Default as has a credit balance. Just like your PPE. PPE is a debit balance based on the principles of accounting. The question does not say there. The question is ask me for the one that goes to the POL. What goes to the POL? Honestly, default tax movement to POL. The question has told me to be charged. Did they give me opening balance?
Hello.
Yes. In the question, it said the opening balance of default tax 15. What do we close with? Close the balance.
7125.
7125. I will look at it. This is a charge. Default tax charge. 7125 minus 15.
5625.
No button. This is one that goes to the POL. Now, ask your question now. Let's see. I want you to ask your question.
Hello,
Let's
sir.
ask your question. Yes?
The interest payable under the carrying amount that with brackets, I thought the bracket is not going to reflect on the temporary difference.
No. It's just for you to know the value of the temporary events. Because if it is assets, we are going to minus it from liability. Do you see the effect now? We will minus it
Yes,
here.
sir. Okay, sir.
Okay, she want your one now. What will be most true?
Any other question?
Good evening.
Any other question? Any other question? Ask your question now, please. Abi? I mean, Mr. Kazim is killing the morale of not asking question. No, ask your question. Don't say, Mr. Kazim, you have killed the morale. You don't ask question. No, ask your question, please. You. Let's do one more of this question again. Let's do one more of this kind of question so that you see. Oh yeah. Let's go to question 7. Let's go to question 7. Question 7. In Mr. Wasu class, which topic are you treating now?
We have only done regulatory framework and what is this one?
Conceptual framework.
Conceptual framework.
Okay. Those are theoretical now.
Yeah.
You have not done. Okay. You can now understand. You can now understand perfectly. Okay, let's take question 7, please. Question 7. Blue bubbles. Question 7. Blue bubbles. Are you there? Question 7.
Yes, I will.
Blue bubbles.
Let's
go to the requirement. The requirement says compute the relevant temporary differences and the difference account as at 31st October. Temporary difference now. Blue Bubble is a limited, the public limited entity is in the process of financing its financial statement for the year ended 31st October 2021. The following information has been extracted from its account record for the purpose of estimating the deferred tax balance. The deferred tax balance. Statement of financial position. There'll be the balance as a statement of financial position, which could be asset or liability. So, question we just say deferred tax. Anyone, and Talon Soro, you could don't know. We're talking, please. And when I will go to the income statement, it is either deferred tax credit or charge. I will draw my team for easy sake.
Who are these people?
Or say items.
Mr. Kazim,
Carrying amount.
Mr. Kazim, can you use your hosting rights to mute everyone, please?
Tax base.
It's disturbing everybody. Can you hear me, Mr. Kazim?
Just understand this class. See how it's more complex on this one. Temporary difference. What is it we should look for? Tax rates. It's a deferred tax liability or deferred tax assets. Item 1, it said inventory. Inventory is stated in the financial statement at lower of cost and neutralizable value. If they say this one, what principles is this? IAS 2. International Accounting Standard 2 on inventory. Who use that? Accountants. The company write down its inventory by 120 to a neutralizable value of 130. It doesn't any value is ignored for tax purpose until the inventory is sold. Oh yeah, what is the carrying amount? What is the tax base? Let's do it together. What is the carrying amount? What is the tax base?
130
For which one?
for carrying amount.
What is now the tax base?
1,250.
1,250.
Thank you, my sister. You get the logic very well. How do you say 130? Net realizable value. This is what the question is saying. IAS 2. Inventory. He said he wrote that 130. He has removed 120 to a net realizable value. This is the write down. What will now be the cost? 250. See, he has write it down from here to 130. He does not give me 150 in the question. He said the net realizable value is 130. After he has removed 120. Who is using this principle? IAS 2 is a lower of cost or net realizable value. That is the principle. Does this thing concern tax person?
No.
Tax person will ask you, what is write down? How do you write down to this one? Say, are you normal at all? What you bought? 1,250. Then I put it in 130. Why? Say because accounting principle. Which accounting principles? In the book of the tax person, this is what is going to be in this. I'll go there. Carrying amount.
1130.
You have created a temporary difference. 120. What is the tax rate? Is it a different tax liability or different tax asset?
It's an asset.
Different assets.
Because the carry amount is less than the tax base. How much
30%.
36.
36.
36. That's all. Secondly, trade receivable had a carry amount of 450 after making a general provision for doubtful debts of 30. Trade receivable making a general provision for doubtful debt of 30 million. The provision is not allowed for tax purpose. You don't need to tell me that. What will be the carrying amount of the trade receivable?
450.
150. What is the tax base?
480.
480.
Also, has it created a difference? Yes.
Yes,
Yes.
sir.
30.
See a different tax liability or different tax assets.
Assets.
But
Assets.
Asset of how much now?
9.
39?
9.
No, 9. Only 9.
9.
I will go to the next one. PPE has a carry amount of 3050 and a tax base of 2750. During the year ended 31st October 2021, property was revalued up by 150. PPE. What is the carrying amount now?
3050.
3050.
What is the tax base? Are you sure? Carry amount 3050.
Yes, sir.
Yes. He said he has given carry amount at the end of the year. Don't forget, he said all these transactions happen at the end for the information at the beginning. They revalue in the year before they get to 3050. They revalue in the year. It means it was 29 before they now revalue 150. They now want to convince us again. 3050. Why the tax base is what? 2750. It has created a temporary difference. What is it? 2750.
300.
300. See a different ability or different tax asset?
Deferred tax liability.
Tax ability.
Of how much now?
90.
Yes. In the year 31st of 2000, development expenditure amount of 48 was capitalized during the year. Amortization of 20 was charged to profit or loss for the year. The development expenditure was allowed for tax purpose in full during the year. So for development expenditure, what is going to be the carrying amount?
480.
First. 460.
480.
No, going to be 460.
180 plus 15, which one are we going to believe? During the year, it does not say carry amount at the end. During the year,
Yes, sir.
development expenditure capitalized was what? 480. And
Yes,
they've
sir.
used 20. So what is
So
going
it's
to be the
what?
carrying amount?
460.
The tax base now.
460.
What is the tax base?
There's no tax.
460.
There's no tax base.
Carrying amount is what? Tax base is 460.
No tax base.
480.
480. Why do you say no tax base?
It's 480 now because the tax
Because
person will
they
recognize
allowed
the
it for the
amortization.
year now. Tax allowed it. So it should either be
Hmm?
460 or 480.
They say tax purposes are on cash paid basis, and you said cash paid is not going to be recorded.
I do not say this one, they don't say cash basis.
They said trade and others are correct that. Am I reading?
Now
This
listen to the
Oh, sorry,
explanation is
I'm
explanation.
not
allowed.
reading.
What is
I'm not reading. The development explanation.
during the year? Okay, this development explanation was allowed for tax purpose in full during the year. They've given them everything. So make use of the more expenses in your PON. Remove the money from the PON.
Full amount.
They grant them in full. They will not have anything. You bought an
Yeah.
asset, 100,000. Let me start this example. You are charging the decision 20,000. The grantor has a grant. They say, oh, you bought an asset 100,000. Okay, use all the 100,000.
So
We are granting you capital
the
allowance of
tax base is
100,000.
zero.
What will be the tax base? Zero.
Zero.
Why? Make use of all the money you spent on the capital allowance at once. The same thing here. Development expenditure has been granted in full in the year of purchase. That's all. So that's this.
460.
30% of 460.
$138.
138.
Is it a deferred tax liability or deferred tax asset?
Deferred tax liability.
Next one. Trade another payable are carried at 600. Trade and other payable. Trade another payable. Trade another payable are carried at 600. Including the other payable are accrued expenses of 100, whose related expenses are deducted for tax purpose on cash basis. What will not be the tax base?
Zero.
Zero.
What will not be the tax base?
Nil. Zero.
500.
Zero.
500.
Zero.
500.
It's
So we
500.
say zero, so 500. Which are we going to believe?
Nil.
Depending on what you choose.
Why do you say zero? It is not zero. He said 100 out of the 600.
100 is
Yes.
deductible.
He said 100 out of the 600, no, not the whole 600. Said, oh, trade payable is 600. But out of that 600, there's 100 that we can tax on cash basis.
Yes, sir.
500.
Don't forget the liability. Payable. He has created a temporary difference of
100. 30%.
say deferred
30,
tax
sir.
liability or deferred tax asset.
Deferred tax assets.
Asset of how much? 30.
30.
That's all. That's all. That is all. I will just sum. 90 plus 138. +138.
228.
228.
228.
$75.
36 plus 9 plus 30.
5.
75.
Huh?
75.
75.
75. The question says identify temporary difference. We have done. Different as balance at the year. It does not say calculate the one that goes to the POA. Say different tax account as at 31st October. Tax as at 31st October 2021. Different tax liability. 228. Different tax assets.
75.
75.
153. 153.
158. That's all.
No, 53. 153.
That is the requirement. But it does not ask us the one that will
Mr.
go to the
Kazim, it's
POA,
153. Oh.
even though it gives us the opening balance. Even though it gives us the opening balance. 153. That's all. Any question for me?
Yes,
So,
sir.
sir, is
Can
it that
go
the
back.
Any
opening
question for
balance
me?
is not useful?
What do you say?
The opening balance.
When is it used? What do we use opening balance to? To no charge to credit. Did they give me opening balance in this question? They did.
Yeah.
How much is the opening balance? Do they request for me to different tax that will go to the POA? No.
It's not part
It
of
does
the
not report,
requirements.
it does not say I have to calculate the one that goes to the POA. If you ask me to go, okay, different tax movement to POA now, which can either be charged / credits. I will need the opening balance. If it is not given, I will say 0. In this question, how much is the opening balance? The different tax liabilities that are spent October 20 amounted to, because the no student does not know what they are doing. What do we close with? Closing balance. 153.
153.
This is a credit. This is a credit. 272 minus 153. This is a credit.
119.
Eh?
119.
119.
113. Jack.
119.
119. 9.
Say 119, 113.
119.
That, my sister, do you understand now? Does he requested for this?
No.
No. Any question?
Yes, sir. Sir, can you go up a little?
Anywhere you want me to go, I'll go.
Sorry,
Let me
the
take it
network
to
was
50.
yes, the network was bad.
Which network? Which person network?
Mine,
Your own network or my own?
Your own, sir.
mine.
Because it's
Even
shaking
your
here.
own
Sorry about
too.
that.
Your own too was
Your
it's
own is
shaking. It
bad.
wasn't going smoothly.
Eh,
It
no, I
fluctuates,
don't
sir.
know.
Yes. There
Sorry.
are some places I didn't hear anything, so I
Same
didn't
thing,
get
yes.
any. There are
Sometimes it
some
fluctuates
places I
for
didn't get
seconds,
anything.
like 5, 6 seconds. Then
Hmm.
It's from you.
You're asking question, my brother.
no,
No,
I'm
I'm
sharing
asking
the
question.
sir.
Yeah,
Yes,
ask
sir.
your
Under the
question.
tax basis, yes. Under the tax basis, how do we get 1250 and 480?
1250.
Is
And
Inventory for the first
480.
one.
Yes. Under inventory, and
The question says inventory is written down to 1130. That they write that its inventory down, meaning they write the value down by 120, which is a principle of IAS 2. IAS 2 says is a lower of cost or net realizable value. They did not give us 1250 in the question. For you to write it down to 1130, that means 1130 plus 120 is the cost. Before you now remove 120, based on IAS 2 rules, is a cost or net realizable value. What is the cost now? 1250.
plus 1.
Who use these principles? Accountants. So what is going to be the tax base? 1130. But for the tax people, there's nothing like writing down of inventory. Nothing like that. The tax base will be the cost, which is 1250. That is it. Any question?
The 120 is what,
Any
sir?
other question? What is that?
The 120.
Is in the question. They say they write it down by 120, meaning they remove 120 from the cost of the inventory to go to net realizable value. Now, before we go further, at least we have done some preliminary up to 4 questions. Let me share the assignment with you. Let me share the assignment. Start asking questions on the assignments. I hope you all have the assignments. I hope you have the assignments.
Yes, sir.
Yes, sir.
Yes, sir.
Because you will not be telling me Now, I'm coming. Let me show. So let's see. Can you see the assignment on the platform? Can you see my screen?
No, sir.
Can you see my screen?
No, sir.
No, sir.
Okay. I'll share. Can I see it? Like this, you call?
Yes,
Yes,
sir.
sir.
I want to ask, based on what we have done so far, question one, let's go to the requirements. What will be shown as income tax in the statement of profit or loss? Somebody raise hands. Adela, you raise hand for what purpose?
Please write it.
Talking.
What amount will be shown?
Somebody says that whether it's not talking again. Okay, let's go to the requirements. What amount will be shown in the income tax? Income tax in the statement of profit or loss of Cora for the year end, for the year two. For the year. Do you know what to do here?
No, sir.
No, sir.
No, sir.
No, sir.
No, sir. If you remember,
To determine the expense or income, that's it.
huh?
To determine the tax expense or income.
Good. I'm coming. Now, look at it. They ask me, tax expense that goes to income statement. Tax expense that go to income statement. That is the first thing I said when we start the class. Tax expense. I say current tax plus current tax plus deferred tax. Deferred tax equals to tax expense in where? P or L. And I say, they ask me, computation of current of tax expense that goes to the P or L. Current tax for that year must be given. It's a must. Does he have over, under, over, provision, slash, under, provision? If it is over, we less. If it is under, we add the movement in deferred tax. Deferred tax. Deferred tax, which can be credits slash charge. This is what goes to P or L. If it is credit, I less. If it is charge, I add. How? Have you not done this? Have we not done this? Let's go to the question. Immediately you see the question, you will know what to do. When they ask you the requirement, how will you not know? It's not that the one I'm giving you, understand it here. You to package yourself, attack question, any question of your choice. Let's go back. Say Cora, try balance, show a debit balance of 2.1, brought forward 2.1 debit balance. on the current tax brought forward last year that bringing it forward to this year. I told you, under provision will be the debit side of the trial balance. Over provision will be the credit side. If it is over provision, credit side. If it is under provision, debit side for last year. Of 5.4 on now. That's a credit balance of 5.4 on deferred tax. They brought forward opening balance. Deferred tax is always a credit balance. If it is debit balance, I will jacket it. And I say the tax charge for this current year, for this year, is 16.2. The carry amount of the net assets
At 30
at 30 million in excess of the tax base. Does it pass message?
Yes.
Does it pass message? This is a deferred tax liability credit balance. How can this one take me 3 minutes in exam?
Because you know it.
Should we solve it?
Yes, sir.
Yes.
If we can understand what I've been saying about principle, all the principle debaters, as I send the question, you will see it, and you are still going to meet this thing in published accounts. So, I mean, send assignment. I mean, they do one. The same way. What is the current task in that question? Let's see, for the year. I said the current task here estimated is 16.2. 16.2. Total trial balance show a debit balance of 2.1 brought forward on the current task for last year, brought forward of last year. What? Debit balance. Is that over under provision? Under provision.
Under
provision of how much now?
2.1 million. Oh, sorry.
Is it 2.1? Let me see. Oh, sorry, 2.1. I'm using phone. 2.1.
That one is deferred tax.
That one is deferred tax. Point one. This is 16.2. Brought forward under debit balance. If it is credit balance over provision. 2.1. I will add. Movement in deferred tax. Opening balance. I'll go and movement in deferred tax. Opening balance. Yes. How much is the opening balance? 5.4 from last year. He now told me 30 million in excess of the tax base. Oh, closing balance. Closing balance. In excess. Temporary difference of 30 million. Deferred tax liability. In excess. What is the tax rate? 0.3. 30 million times 0.3. 30 million times 0.3. 30 million times 0.3.
3.9.
3 point what?
9. 3.9.
Is it a charge or credit? Differ?
The
Plus, is it a charge or credit?
charge.
How can it be a charge? Is it increasing or decreasing? How come? How? Beginning is 5.4. It has come down to 3.9.
The credit.
If it has credit.
1.5.
5.4 minus 3.9.
1.5.
Good. That's all. That is all. That's expense in the POA. Oh yeah, sum everything. You look for
16.8.
You're welcome. That's all. That is all. You see the second one. See what it's saying. Energy star. Oh, try balance as attachment. Show a debit balance of 700 on the current task and a credit balance of 840 on deferred task. Credit balance. Task is always on credit balance. It does not mean it cannot be a debit balance. Anybody that is raising hand, talk. You are free to talk.
Actually, I tried talking. So please, the question 1, that 2.1, it was given as debit balance. And you said that debit balance is under provision.
Under provision.
Yeah. Is that not, we added it. It's not supposed to be subtraction now.
No.
What should be addition?
It's over provision that is.
Thank
We
you.
had under, we less over.
I said, go to the material. Over provision. What do we do to over provision? Less. Where are you going to see over provision? Credit side. Where are you going to see over provision? Credit side. What do we do to over provision? We less. Yeah, you better know it here. I can use submit it in the published account because POL has tasks. So under provision, what do we do to it? We had.
Which one we had?
Under provision is where?
Under provision is on the credit. Sorry.
Debit.
Is the credit balance.
Under provision is on
Is
the debit.
Debit.
Under provision is the debit side of the trial balance.
Yes, sir.
Over provision, credit side.
I will add it.
Over provision, we less. Under provision, we add. Can you see my screen?
Yes, sir.
Can you see my screen?
Yes, sir.
This is trial balance. Look at question. The trial balance, the balance on the current represents under provision or over provision for tax liability. Additional information 3. The balance on the current tax represent under over provision of tax liability for the year 31st March 2002. Over provision, a provision of 28 million is required for the current year tax for this year ended 31st of March 2004. And the deferred tax liability was assessed as 8.3. This is what they will take out of the published account that you are going to do. I'll just go to my trial balance. It will not tell me whether it is under or over provision. It will just say it in additional information. I will use my sense. I will go to the trial balance now. I say, okay, what is there in the trial balance? Say income tax, current tax, no 3.32 is under. Because where? It is in debit side. What am I going to do? I will add. I say, give me current tax for the year. Yes, current tax will be in additional information. He said, this is what is the requirement to see the year. Prepare BBS statement of profit or loss for the year ended 31st March 2004. So the current tax of 2004, you will see it in additional information. A provision of 28 million is required for the current tax for the year ended 31st March. The deferred tax balance at the end, 8.3. I'll go to the trial balance to go and get the opening balance to know whether it is a charge or credit. Deferred tax, see, it's always a credit balance. Opening balance, 1.6. I will compare it to the end. That's all. We are still doing this in isolation. They will still bring everything you are doing to your publish. Go and check your account pack. Know it and know peace. Are we going to do group account in this class?
Yes, sir.
Yes, sir.
Are we sure are we going to do?
Yes, sir.
Yes, sir.
I'm say.
If you had, I will just before I want to quit before I say, I can say don't do this, don't do this. If the problem too much, I say okay, hand off, go employ another person, make it do the job.
Yeah, no handing off. Oh. You have started, you will finish it.
Exactly.
You signed the contract, okay?
You just have to be patient. Be patient.
I signed contract.
Yes.
So
Yes,
sign
sir.
contract, make person won't come die for the contract.
You will not die
breach.
now.
No breach of contract.
Because already. Oh.
You will
I
not
don't
die.
I'm not the one that is signed with the management, but the one that is signed with permanent in it.
Okay. Oh.
I must teach us to open everything wide.
Lord is your strength.
How wide you open it?
Immediately you wear tax expense, calculate tax expense. It's only 3 things. The current tax of that year.
Mr. Kazim, we can see your WhatsApp.
It's my WhatsApp, I'm showing the team. My WhatsApp. You people, now I have too much.
So you calm down. This is just the second class. We tell you we love us.
Yes, Kia. Just a patient with us for now.
Yes, sir.
Endurance has limitation.
But this one does not have limitation. We will do better.
You will just say, bring it. If it's the thing will have changed, let me modify the question. If he said the deferred tax is not a credit balance, a debit balance, see what will have happened. Let me show you what will have happened. If we say the deferred tax is not a credit balance. It's a debit balance. We expect defaulters to have a credit balance. Look at what will have happened. We are modifying it now. The opening balance is a credit balance. It's reported. Defaulters is reported in liability. Liability has a credit balance. But it does not mean we cannot have a debit balance. But if the question says it's a debit balance, I'll just say 5.4 jackets. It will change the story. This will now give me 39, 3.9. I will now look at this, a charge of credit. This is where I want us to be, where they will miss it anyhow. Who can tell me is there a charge of credit here now?
The charge.
It's a charge. Charge of how much? We had 5.4 plus 3.9.
$9.3.
You should have given me 9.3. Because 9.3 minus this would have given us this. Get the logic. First, no. A statement of financial position is a credit balance. It's a credit balance. Does not mean you cannot. PPE is a debit balance. That is that. Any question on question one? Any question? Look, question two. Energy Star Co in trial balance as at as best show a debit balance of 700 on the current task and a credit balance of 84 on the trial balance on the default task. But the director have estimated the provision for the income tax for the year 4.5 for the year, and the required default tax provision of 5.6 and 1.2 million, which related to a property revalue. What is the income tax amount to be recognized in Energy Star Co. The statement for profit or loss for the year ended as 2002, 2003. Don't forget, in the trial balance, what did they bring forward? At the first day of 2002, show a debit balance of 700 on the current tax. It is in debit balance.
Yes.
What is that one?
Under provision.
The credit balance of default tax. Good. I'll go and get my movement in default tax. Income tax for this year, 4.5. And we had 4.5 plus 700. Then the required provision for default tax is 1.5. 5.6 for the end.
That's
the out of it, 1.2 was which is related to property revaluation. 1.2 out of which related to property.
What revaluation?
Revaluation, which we have not done IAS 16. You know, when we revalue an asset, it goes to where? OCI. The matching concept, I will show you. You get this. But IAS 16 will have touchlight so many things under revaluation model of IAS 16. In order to have matching concept, it will go there. So no matter what they say, you will see it. With this explanation, Leand, I said snap and send to me. I will send the solution. It's only one person that do one tiny thing in a snap. look at it and say, okay,
Sarcasm,
you are the one now, you are the only one. And what you did is only part of which is not even Olofa. Let us
Ó deep gan.
So deep, bro.
Tell you correct.
you correct in one. One is not to look at the question 3. On January
Sir,
2008. Yeah,
sorry, before we leave that, the revaluation, what effect is it going to have?
he's going to OCI.
Other comprehensive
Other
income.
comprehensive income.
Yes.
Okay, so no.
Please don't ask your question here. You ask it in evaluation class.
That is why you have not done IAS 16.
So how do we now solve this particular question? Because it's
I will
reflecting
ask,
here.
the way I said, do anything you can do. Let me send you solution.
Okay, sir.
I said, do anything you can do. I cannot be giving assignment as if you give me the solution. I just let's say, okay, let me take all this one for the principle, what we have done. Yeah, you see this one. Question 3. In short, I expect everybody to do this one. In January 2009, the current amount of a non-current asset exceed the tax base written down value by 650. The carrying amount. For the year ended as well December, the entity claimed depreciation for the tax purpose of 500 and a charge claim depreciation for tax purpose, capital allowance of 500 and a charge depreciation of 450 in the financial statement. During the year, entity revalue property, the revaluation plus 250. There was no current plan to sell the property. The rate of tax is 30% throughout the year. What is the provision for deferred tax? IAS 12 as at 31st December 2008. This one, even straightforward. You have given me opening balance of deferred tax, not current assets, exceed the tax base. Depreciation and capital allowance, you can interpret. I bet you say you cannot interpret depreciation and capital allowance. When depreciation is greater than capital allowance, they giving you the two. It goes to the P or head. Add it to the beginning. That's all. The rewind, the revalue, multiply 30% to create a deferred tax. Add it to it, that is the end. Because at the beginning of the year, you said the carry amount of the non-current exceed the tax base as at 1st January. You now told me that during the year, depreciation and capital allowance they give us, which I can interpret. I have taught you when depreciation is greater, it will go to the POL plus the deferred tax that I bring from at the beginning. I will add to it. There is nothing hard in all this thing. It's just for you to calm down. Look at it with what we have done. You will sort everything. Yes. I will extend this assignment till Thursday. I want you to do something. Anything, no, nothing is wrong. Just do it. Snap to me, I will send to you. I will send to you. That's all.
Okay, sir.
There's one that purchased an asset. Lola and Margaret could purchase new machine for 1 million as the residual value of 200. The useful life of 8 years. The plan is divided on a sale line basis. Tax allowance of 50% cost of the asset can be claimed in the year of purchase, as the depreciation is not allowed for tax work. then the rate of income tax is 30%. I expect everybody to do this one. This is firstborn.
That's
This
question
is
7.
firstborn. Just get your depreciation, get your capital allowance, remove it, get the carrying amount. So, or should I send all the solution? You don't want to try the assignment?
No.
We'll try, sir, but you can as well send the solution, but we
So
can
we'll
try.
try it, sir. So when we send it to you personally, you can send us the solutions.
A minute, I've been sitting since 5 o'clock. Let me start small. I beg. I've lectured like 3 or 4 hours before your time. Let me start. Can't keep myself.
No, we've not treated
After
IAS
I
12.
said after you pass, I said you must bring wine.
Then I told you, sir, we'll bring it to.
After you pass, you must bring wine.
That one for sure, sir.
You will not be telling me that the reward of teacher is in heaven. Who tell you I'm going to make heaven? Now I must eat my reward on this earth.
You eat it too, wallahi, you eat it.
I eat both on earth and in heaven.
Eat it both on earth and in heaven. In fact, it's
Give
even
me like
better
3
to
minutes. I'm
enjoy it
coming.
here
3
and in
minutes.
heaven. No?
So you go through it. You just lay hand to what you can do. I will send solution. Then if possible, I can explain 1 or 2 things there for you with voice notes so that before we meet, we get it done. But for the voice notes, we know that the voice notes know that the voice is not too clear, we will manage it. Okay. Let's take question. Let's take question.
Question, please.
Looking at the question we are going to take.
Yes, sir.
Now let's go to page. Let's go to question. Let's do 15. Or we should increase the complexity.
Oh.
Let's go to question 15.
Yes, sir.
Question 15. Let's start there. Yes, ma'am. Question 15.
What jump you say?
Bojan PLC. What is the requirement?
Compute the current tax.
For who the current tax? They just ask you compute the current tax. And now say computation of current tax for the year ended 31st December 2016. Don't forget to compute current tax. You must give me accounting profits.
Yes.
They give us accounting profits. For me to compute current tax, there must be accounting profits. Budget and accounting profit of 3 million.
3 million.
This is it. For the year ended as well as December 2016. The following facts we are discovered when reviewing the financial statements. The accounting profit was after depreciation of 200,000 on property, plant, and equipment. Don't forget, this is a disallowable expenses. I would say depreciation in PPE. What do I do to depreciation on PPE? I will add back. See, disallowable. They only grant capital allowance. Next. Other than lease property. A profit on disposal of non-current assets of profit on disposal. Profit on disposal is a not taxable revenue because before you can get profit on, you must have taken care of capital gain tax. Let's go to any information on profit, additional information. 1, all profit on disposal of non-current assets is not taxable under the company income tax. Yes, because it's not under company income tax. It is under capital gain tax. So if it is profit, I will less. If it is loss,
You add it.
Capital gain tax. So profit on disposal of non-current assets. How much is the profit on disposal of non-current assets?
300,000.
Boja incurred development cost of 200, out of which 50,000 has been amortized. Just like depreciation, amortization on expenditure, we add back
50,000.
50,000. During the year. And what is the position of the tax people on development expenditure? If we go to additional information 4, development cost is allowed deduction for tax in full in the year show expenses occurred. So We are going to tax it in full. We are going to remove it in full. It's a liable deduction in full. And I say, okay. Development expenditure expenses. Of 200,000. What do I do to it? They grant it.
You subtract it.
Moja owns a plant on finance lease. Anytime you see this, let me show you what to do. Anytime you hear a lease asset is on lease. Lease asset. What do you do? Depreciation on lease. Add back. You add it back. Then finance costs on the lease, you add back. But the renter, the lease renter, you less. Anytime you hear lease. This is 3 things you need to know about lease. This is only 3 things you need to know on lease assets. What I was a plant on finance lease in which sum of 65 has been charged as a finance cost. What do I do to the finance cost? I will add back.
You add back.
Finance costs. $65. A sum of 110 has been charged as a depreciation. Depreciation on lease assets. On lease assets. And a sum of 150 was paid during the year in respect of the lease renter, lease payments. The lease renter, how much was paid? 150. What do we do to that? You less.
You less.
Anytime you hear lease. The company obtained sum of 10 million naira at the beginning of the year for purpose of constructing a warehouse. The rate of interest is 8% per annum. The amount qualifies as a borrowing cost in line with IAS 23. Oh, that interest on borrowing should be capitalized by adding it to the loan. But the tax people will disagree that interest on loan should be expense to pure. We say, no, our accountant will follow IAS. IAS 3 says interest on borrowing cost should be added to the cost of the asset. As we go, interest on borrowing of 10 million by 0.08. I will remove it.
800,000.
8,000 will be removed. It's an expense. That is it. The warehouse is under consideration. Sum of 200,000 was paid as a fine for contravening the law. Fine. What do I do to the fines?
You add back.
You add back.
These are liable expenses. Why do you contravene the law? I will add back the fines. Then a general provision. A general provision was increased from 500 to 500 from 400. Oh, is the increment you will take.
Yes, sir. 100,000.
What do we do to general provision?
Add back.
Add back. No. The company donated 250,000 for political party during the year. Donation.
Not allowable.
Donation is not
It's not allowable.
not allowable.
You add
You
back.
What
add
do I do
back.
to the donation?
You add back.
You add back. It's not allowable.
That Mr. Francis. The tax authorities is of opinion that profit on disposal is not taxed under the company income tax. Yes. Fines are not deductible for tax purpose. All rental payments are deductible allowance. Lower costs are deductible deduction for tax purpose in full. Accounting inflation is not allowed for tax purpose. Capital allowance is claimed at 10% per annum on building, 15% per annum on machinery. Apply on the tax down value of the asset as at the beginning of the year. The tax down value of the plant and building at the beginning of the year was 500. Oh, I can now calculate the capital allowance. For the capital allowance now. There's a building. How much is the capital allowance that will be claimed on building? Don't forget the rate. They say it's 10% on the
Yes,
tax
sir.
product. Building has 900,000
900,000.
times 0.1.
90,000.
Then on plants, 500,000.
500,000. 75,000. 165,000.
Huh?
165,000.
Oh, now less 165,000. That is all. I will now sum everything to get my taxable.
2,460,000. 2,460,000.
2,460,000. Then I will apply the tax rate. How much is the tax rate? I say 30%.
30%.
So I can say tax rate times taxable profit will give me the current tax.
738.
And I say current tax
738,000.
738.
38.
That's it. That is it. Now, go to the question we are doing. Now we have done all those calculations. Is the combined now? We are going to start with the combined now. Might not be this night. Like, go to question 24. What is the requirement of question 24? Prepare tax computation and the current tax expense. Calculate the different tax. They will not start bringing everything. That is the next position now. All what we have planned, that we have done, we will not put everything. These are the questions I can use to give you people So it's the combination we are now in now. If we go to question 16, identify the tax base and the temporary difference for each of the items given. Calculate current tax for the ended. Calculate deferred tax. Calculate income tax expense. We go to, this is where we are now. So please go through what we have done, lay your hand on the assignments, send to me personally or give you. Then next minute we go to the combine. Immediately we finish the combine, we move to another standard. Any question before we call it a day? Abẹ́ ti sùn, ṣé ti sùn lọ ni? Have you
No,
slept?
sir.
All of you don't sleep with me.
No,
I
sir.
have not slept though.
Okay.
Don't sleep. Oh.
If you sleep, you wake up. Oh.
Ah. Don't sleep at all. You wake up.
Sleep is the
Okay,
use.
so
And we have
Question
done
nothing
some
to do
parts.
with
What we
IAS
do.
12.
So it's like that. Time. They are just testing the IAS 12. Back to back, back to back, back to back. They stop now. Don't be surprised. They can break it this time. So that's why we must do everything.
Okay, sir.
So see you on which day are we meeting again?
Next week, Tuesday.
What do you have tomorrow?
all like auditing you.
Audit. Okay.
Those that are doing that, not everybody doing it.
Even if I'm not doing all this, sir.
So, my brothers and sisters, see you on Tuesday.
Okay, sir.
All right.
And don't forget, my lines are open.
I thought we'll have a class tomorrow.
You can shout me. You can call me.
Okay, sir.
Good night. See you.
Good night. God bless you, sir.
Good night, sir.
Good night, sir.